Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 27th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic and geopolitical environments and how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I go a little bit further and layer on some option strategies that I find to implement into my portfolio based on those assumptions I come up with the economic data, the geopolitical environment, and my market analysis. So without further ado, let's get on with the economic data. We got a little bit coming out today here in the United States. We've got the Richmond Fed Manufacturing Index coming in at negative 27, expected to be at negative 40. It's negative, but it's not quite as bad as what we were expected, so that's a good thing. Another aspect we're going to need to look at, it's not one of the more widely looked at economic data points, but I find it one of the more interesting ones, and it's the beige book. The reason why people kind of fade this beige book is because it really is a lagger compared to what the Fed governors get right ahead of the Fed meeting. So this comes out a couple of weeks ahead of those FOMC meetings. Well, today we're getting the beige book. Yes, it is going to be a little bit dated by the time that the Fed comes in and looks at real data, but it's the same stuff that they're going to see a couple of weeks ahead of time. So I like to watch it. It's really a good economic gauge as to what is going on in these different sectors. So keep an eye out for that. It will, I think, be a bit of a mover today if there's anything strange coming out of that number. It is a composite also of some of the economic data points that we've seen, but it's great when it's all put together. You also get some of these Fed governors talking about it, which is what we want to hear. All right, so let's move on to crude oil. Crude oil inventories are starting to come off a little bit from record highs, keep in mind. So we are seeing a little bit of weakness here today in crude oil. It is still holding on to those 30s. It bounced off of the 9-day moving average, as we can see here, pretty dramatically this morning. It was really getting some push, and then the equities started really moving around, and it's kind of lost its bit of a luster and kind of slowed down. But you can see it bounced off the 200-day moving average right there, and looks like we might want to start trending sideways here in these low 30s area. So we're going to watch it, see if that 30 handle can hold on. We may have be out of the 20 handle for some time. We could start to see this trickle. Another thing we're going to want to keep in mind is that we have a bit of a gap here, not a very good drawing of the gap, but you can see there's a bit of a gap right in there that the market may want to go up and cover. Having said that, that's up into the 40 handles, so we're going to have to start seeing some real demand coming out of these markets with the manufacturing sector open up, people more driving. We did see the airlines do very well over the holiday weekend. It was the first time we started seeing 300 plus travelers going through some of these airports. The airlines were at elevated levels since April, so starting to see some people come back. I was even talking to some people over the weekend. They believe right now is the safest time to jump on an airplane. Why? Because there's so much going on with cleanliness of these airlines or these airplanes that people are going to go into them, and they're probably going to be the cleanest they've ever been. So a lot of people feeling safe about that, but not wanting to travel necessarily to these zones like Chicago, New York, where they have been the epicenter for a lot of this stuff. So and pull back a little bit. Keep in mind that a lot of these deaths have been happening in healthcare facilities as well. So that's where we're really seeing that. If you are elderly and have some type of immune deficiency, that's where a lot of these people were being affected. So I believe the numbers are a little bit skewed in that, but that's my pulpit, and I'm going to talk about it, I guess. All right, so gold futures coming off a bit by about $10. They were down quite a bit further earlier today, starting to make a little bit of a comeback after testing that 1700 handle. Now, I've talked about it. I think that we're going to stay between this 1660 and 1780, 1790 area. I don't think we're going to see 1800 anytime real soon, despite the fact that the U.S. government's printing money like it's going out of style. Everybody else is doing the same thing too, so it's kind of leveling it off just a bit there. Bonds moving a little bit higher today after opening up severely down on the day. That was when we're making this comeback because we opened up this morning with the Dow in positive territory. Everything kind of shifted around. We were looking at some really negative, not really negative, but moving into negative territory, some bearishness coming into the market. But now we're seeing a bit of a push, mostly probably due to this Richmond manufacturing survey. Also, we're going to be having that beige book, and I think people are looking forward to that and kind of getting ahead of that to the upside. All right, VIX pretty much unchanged on the day after having its wild ride based on what we're seeing with the equities. You can see with the Dow Jones up about 215 points. We were in slightly negative territory right after the open, but continuing to see some push here. A push down to the lows of the day is going to make this look a little bit more bearish, you guys. So it may look like we're starting to roll over a little bit. NASDAQ really starting to make that already happen, as we can see yesterday. We got somewhat of a continuation pattern between these two candles right here. That's usually a signal that we're going to continue higher. But then today, the big sell-off happening. Well off the lows, though, as you can see. But we have tested that 9-day moving average and broke through it, probably right below that right now. So we're going to have to keep an eye on that C, because that is short-term bearishness, right? If we settle below that, we're looking at short-term bearishness. Settle above that, continuation to the upside. It did break below this Fibonacci as well. So, you know, a lot of levers and pulleys going on here. I think that it's more of a sector rotation in a sense. We've talked about this. Microsoft, EA, Electronic Arts, a lot of these, MasterCard, made some big moves to the upside, right? And I think a lot of people are looking like, okay, well, we're taking some of this money out of the tech sector. We're going to move it over into some more blue chip type stocks there and try and have a bit of a sector rotation that has been lagging. Now, the NASDAQ has been the one that has rallied better than everybody else, or has really moved to the upside into positive territory for the year, whereas the other indices have been dragging a little bit. So I think that it is people taking some profits out of NASDAQ stocks and putting it into things like the Dow Jones and E-mini S&Ps. Now, E-mini S&Ps are right there at that 3,000 mark. Keep in mind, this is a Fibonacci here, and I've talked about it. I think we're going to start seeing it slow down a little bit, but we did get that paradigm shift with the value areas moving right here to 3,000. So that is going to negate a little bit of that support resistance area with the Fibonacci and even the 200-day moving average. We talk about that a lot with regards to trading, that those types of setups are usually a support and resistance level, a 200-day or a Fibonacci level, especially something like the Fibonacci level here, which is, I think, the 23 or 38, sorry. So that we would normally see some support and resistance, but now with that value area where it is lined up with where the most time and volume has been spent, so that's where we have found value. So that value lining up with that line is going to make it just kind of breeze through that a little bit more. Some people, you know, that aren't using market profile might say that it's acting as a support and resistance, but really it's acting as a magnet right now. And we're seeing that come to fruition today. All right. I guess we're not looking at the breakdown of the E-mini S&Ps. It's actually pretty boring. Let's take a look at it here. Off the open, we started getting some sell-off, getting a bit of a bounce here, coming back. You know, it was pretty bearish. Flushed out the overnight inventory, which was long, and starting to get a bit of bounce back as there's really nothing to talk about other than maybe Disney and how there are hordes of people there. As a matter of fact, I heard it was a 3-hour wait to get into the Disney store. You talk about pent up demand for people wanting to get out and getting their whatever their fix is, whether it's going to the movies or going to Disney. There are people that are willing to go out there and be in public. They weren't doing very much social distancing. I guess a lot of the cast members were kind of yelling at people to disperse just a little bit rather than trying to get up front to see the cast members. But Disney opening up, getting a little bit of a move higher here today. They did very well on the opening where everything started to go pretty hunky-dory. But then we started seeing some video of all of these people clustered together and the lines and stuff for the Disney store caused a little bit of a weakness here in Disney going forward. I still have all my Disney longs. I just wanted to talk about that. EA Sports is coming back, and it was one of those ones that I was talking about was down pretty big. It was down over 10% earlier today, but you can see down only $2 when today the low we could check was what was the low here? The low 111.11. Pretty interesting number there, isn't it? We used to call that the good luck number. And what was I saying? Anyway, that being down almost 10% at that time. When we were down 111.11, that would have been $6. So maybe not quite 10%, but it was feeling like it. All right, so let's talk about some trades that I've done here with Microsoft. Let's talk about how I got into this trade, where we are now, and what we're looking to do going forward. So this is a trade that I've been talking about for quite some time, and I have dollar cost average, lower my cost basis on this, done just about everything with this trade. If we remember on February 13th, just before February 13th, all right? So I went out and decided to start laying some trades down. This is when we were starting to get that big pullback. Here, I'll try and pull this out so we can see where February 13th would have been pretty early on in all of this stuff. So this was before really the pandemic and or the lockdown started happening, and I decided to go in there and sell some puts in there. Where am I at? Sold the February 13th. Sold the February 21st, because on the 13th I sold a put spread, covered that for a loss. That didn't have to do with all of this. So I did lose a little bit of money on that trade, selling a put spread, buying it back for a debit that was higher than my credit. So I did lose money on that. But talking about the 21st, I guess. So the 21st is where we started this big drop here, and I ended up selling some puts in here as a trade. So this is February 21st. February 21st, went in and sold some puts early in the morning, and I sold the 160 puts in the March. Sold the March 160 puts originally for 86 cents in there, and then I added late in the day some March 160 puts for $1.29. So added to my position, was looking to collect a bit of a credit, went in small originally and then added to that position, kind of doubled up on it. And then the market kind of fell out of bed, as we can see here, market falling down. That was starting to look like I was going to get put those stock. So I also went in and did some dollar cost averaging by selling the March 126 puts. So then on the, what date was that? The 12th of March, sold the 126 puts, and I was able to collect $2.10 for that. All right. So we're looking at adding credits. These are all credits that I'm getting for these different trades. and I'm willing to take these into my account. That was the key with this, and especially implementing options into our portfolio. The course that we're doing right now is how we implement these options into our portfolio when we are trading around stocks we want to own. And Microsoft was one of those things where I was like, hey, coronavirus isn't going to hurt Microsoft. If anything, we're all going to be staying at home and we're going to be building out our home offices. I'm staring at a Microsoft camera right now. So anyway, I was believing in Microsoft was going to make that big bounce. Basically getting put the stock here. So as these March expired, you can see we are trading, I'll just have to tell you, it is trading around 130, traded down to 134-ish or something like that. It settled out at about 134, 135, 130, let's call it 136. So 136 settlement. Obviously these 160 puts got put to me. So those got put to me at 160, all right? So at $160 a share. These expired worthless, so those equaled 0. I got to keep all of those credits though going forward with my account there. So that being said, I'm looking at basically $4 and let's call it $4.25. So lowered my overall cost basis on this by $4.25. If I'm doing the math in my head right, okay. So we're thinking about this. Now I am long at 150, 55.75. So that's my break even on these. So I've lowered my overall cost basis after getting that stock put to me. I ended up going in and selling some April. So that's this time here. Now I'm going in and selling some April strategies, selling some calls against that. And I did this on the 12th. So right after I did these 126, sorry, that's for those. On the same day I got those puts, I sold the April 185 calls. So I sold the 185 calls in there for about 55 cents. So collected that. That's also lowering my break even by 55 cents. So we can look at that as now my break even is now 155.25 with that. Yeah, because I always get to keep those credits, you guys. And then rolled out of those 185 calls to the 160 calls. So I was looking at it like, hey, I got long there. I've lowered my overall cost basis on that. So I rolled the April down because I was losing on that. Not always the best thing to do, or not always the thing we want to do it. So down to the 160 calls, to the 160 calls with that roll, and got a total collection of $1.34. So that's another $1.34 credit. This was a credit. So I rolled out of the 85 calls for about 16 cents and into the 160 calls for a total credit of $1.34. Now, with those 160 calls, those ended up going out and expiring worthless. So I was able to keep that because we can see here the market started rallying. And actually, no, I got those called away from me on that trade there. And then ended up selling the one, did it small, ended up selling on the same day, 5 days later. Sorry, I'm getting a little confused. I sold the May 195 calls in here. So the May 195 calls, and I was able to collect on that $1.24. And then 5 days later, on the 15th, and then on the 20th, I sold the May 155 puts. 195, yeah, so 155 puts. I wanted to look to start adding some of those calls that got called away from me. And then the 155 puts, I was able to collect $1.58. All right, so those are all credits on that. So got out of my 155 puts for a 10-cent credit. So I covered that on the 5th. So on 5/5, covered the 1 May 55 puts for 10-cent debit. All right, so 58 cents, 148 all day. So I'm looking at $3 here, $3.74, and $3. So that's $5.15. So I lowered my overall break even. Let's just call it $5. So now my break even on these is 150. I had some of them called away, like I said, at 160. Still had a couple on, and then had sold gotten out of rolled these right here, rolled the 195s rolled to the 200 calls in June 200 calls, collected a total credit of 124. So basically got out of the 195 calls for about 20 cents, rolled out and up and away to to the 200 level, collecting 124. Sorry, you guys. And this was another credit, right? So now I've got to lower my overall cost basis by another $1.10. I covered these today, covered on this sell-off. We had a bit of a sell-off here today, so I was able to get out nicely for a 22-cent debit, right? So collected an overall $1 credit with that on that trade. And that was for half of what I own in on this roll here, and all that collection there was actually on about a half of it. So that might be off by, it's probably 150 is my break even. If I take it, say this is 50 cents to each of the ones that I own, and then this was 50 cents to each of the ones I own. So that's overall lowering my cost basis that way. So lowered it by almost $10, you guys, in just a matter of 3 months by doing this and doing dollar cost averaging, lower my overall cost basis, staying ahead of this game, despite the fact that everybody else was screaming and panicking, right? We did very well on that trade. Even on those ones that I got called away from me where it seemed like, hey, Wolfman's just doing a scratch. He bought him at 160 on the down and then gets out at 160 on the way up, you know, took a lot of risk there. Well, I lowered my overall cost basis by $5. So I made $5 on that trade. It wasn't necessarily a scratch. Yes, I was adding risk and stuff like that throughout that trade, but the fact of the matter is I was staying mechanical with those trades. That's how we stay in the game longer. That's how you can become a trader for a long-term time. It's not just like shooting from the hip. We're staying mechanical, staying in this, lowering overall cost basis on these trades in order to get to success earlier, right? So that I wanted to talk about that. That is really the precipice of what we are talking about in implementation of options into our portfolio. You know, that was, in my eyes, putting on a clinic. I got in way early on that trade, right at the beginning of coronavirus. And, you know, I talked about this. Microsoft isn't going to be necessarily affected. Yes, they had some supply chain issues in China, but ultimately the demand for their product was going to outpace any of those bad news or those bit of setbacks going forward with China. So stayed with that trade. As you can see, it's working out pretty good. I was actually looking to sell some puts in there, but I thought maybe I'd get another leg down tomorrow, but we've gotten a bit of a rally back here, and may have missed that opportunity to sell those puts at the location I was looking at there. So anyway, that's all I've got for you guys today. That's all I've done in Microsoft. Keeping an eye on EA Sports as well as it's making a comeback, because there was a couple of moves I was going to be making with that one as well. But stayed in EA and haven't done anything. Oh, TLT. I knew I was missing something. So right before I went on here, I did some TLT trade. Added some longs because we saw bonds got a little bit overdone in that move. If I just pull up the bond trade here, let's pull up the bonds. Bonds kind of broke out of that little area I've been talking so much about, right? I've said, you know, we're going to kind of stay within this range here, 177-ish. That's a little bit below even where I was thinking. I was thinking we'd stay right around above 178 and stay below 183. So it broke below that little range earlier on. So I decided to add some TLT to this trade, to my portfolio, and I went in and sold some June 157 puts in there for 64 cents. All right, so added a little bit of bullishness to the bonds. I think that we're going to get more of a rebound here and get back into that tight swath that I've been talking about, because I don't foresee interest rates going up anytime soon, especially with 30 million people unemployed. All right, that's all I got for you guys. Really long-winded today. I'm sorry for that, but I wanted to talk you guys through what we've kind of been setting up for in this implementation of options into our portfolio. We've done these trades based on the mechanics that I set up for those webinars. High implied volatility, how we stay mechanical in it, and I just put it all together with this trade. I'm not cherry picking you guys. I'm talking about the losers, and I was talking about this Microsoft when it was a loser, right? So I'm just talking you guys through how you stay mechanical with these trades. Take the emotion out of it, and you'll be a much better trader. But please take a moment to go over this disclaimer. Past performance of any trading system or methodology is not necessarily indicative of future results. We are an educational company. I'm not trying to solicit you guys into trading Microsoft or any of these other stocks I'm talking about. I'm talking about my assumptions and how I implement options around those assumptions to stay mechanical and increase my probabilities of success. All right? And knock it out of the park. Anyway, if you can't take that, take it easy.